You don't fix your trading psychology by thinking your way out of it. You fix your trading psychology by fixing everything around it. Welcome back to another YouTube video, everyone. Today's topic, we're going to be talking about how to fix your trading psychology. I've received quite a few questions about this in previous videos that I've made, and it's one that I've thought long and hard about for myself as well, and how I was able to overcome my psychological issues of fear of execution, fear of missing out, chasing trades, revenge trading, all of this stuff. I came to the conclusion that you're not able to fix your psychology by thinking your way out of it, because you can't get yourself out of a situation with the same mindset that got you in that situation in the first place. So how can you alleviate this, and how can you start to build correct foundations in your psychology and build the mental frameworks that really help you to produce consistent profitability? And so when I thought about it, it was, you don't fix psychology, you fix everything around it, right? And what that does is it helps to reinforce good psychological habits, and then those habits become a part of your identity. Then consistent profitability doesn't then become something you do, it becomes someone that you are. So what do I mean when I say fix everything around it? Having a clear approach to the market, having a clear strategy, clear set of rules is going to help alleviate some of that execution issues that you have when you come into the market. Very often people become emotional in trading because they don't have clear rules that they can follow. And so that causes emotions to seep into your decision making, because your decision making is not clear cut. And so having that clear structure and plan allows you to feel emotions but put them to one side, because you know, this is what I do, this is the approach that I follow, and that's what creates consistency and a consistently profitable trader. So what else can we fix around our trading? Fix risk management. Again, very often I see people changing risk. They're taking partials at different points. They're reducing risk at certain scenarios. So their risk parameters are consistently changing. At least in my eyes, how can you be consistent in your results if your risk is up and down? You're on this risk slide. And, you know, I guess there are some scenarios and some situations where reducing risk is warranted, and, you know, maybe increasing risk is warranted as well. But again, that's for more of a discretionary, experienced approach, and not something that if you're not consistent, you shouldn't really be doing that in my eyes. A lot of the issues that I see is inexperienced traders trying to trade like experienced traders. They're trying to go from 0 to 100 without doing all the middle ground between it. And so very often, you know, you haven't built anything that really warrants you to be able to trade with experience and trade with discretion and trade with chopping and changing all of your parameters and your risk approach, right? You haven't even built step one, right? Forget about step 100. Focus on step one. Build that first. Then eventually you can get to step 100 eventually, right? It takes time. Like, stop trying to rush the process. And so what else can we control? Well, we can control our screen time, for one. Most people spend far too much time looking at a chart. And we've all experienced it. I myself have experienced it, when the longer you look at a chart, the more your brain starts to look for reasons to take a trade, right? So it looks for this confirmation bias as to what can support the narrative that you have already in your head. And ultimately, if you look at a chart long enough, you can find something to do. You can find a trade to take. So you need to take that aspect out of it. So if you come to the charts and you don't see anything, there is no point in you continuing to stare at the charts. So set your alerts and close down the charts. That's all you need to do. We often get lost in this idea that if we're not doing something, we're not progressing. If we're not trading, we're not making money, right? And you really have to get this out of your head, because ultimately that's an employee mindset. It's just the society that we've been brought up in, and the habits that we've been taught as children, is that you work and you get rewarded for it's a direct input and output, right? So the time that you put in is directly outputted in what you get out. Whereas trading is not like that. Trading, you can put tons of hours into the charts in a month and you can come out with a loss, right? You can still lose at the end of the month, regardless of how many hours you spend, how many good decisions you make, you can still lose. And that is the unfortunate business that we're in. We're not in a game of certainties. We're not in a game of monthly paychecks. We are in the risk management business. We are at the mercy of the market in ourselves. And if you can't master that, then this business is probably not for you. So if you don't see something that fits with your strategy, walk away. It's all right to walk away, right? Money's not made in the doing. Money's made in the waiting and then being ruthless with your execution. Being sloppy, being impatient, that's where mistakes happen. That's where costly mistakes happen. And that's where you really bridge the gap and get further away from your goal of being able to draw consistent profits from the market. So I think it's important as us new traders, and people that have been struggling for a few years, is to stop trying to think your way out of your psychological issues. Gain clarity in your approach, gain clarity in your structure, your backtested data, and trust that data. Do the things that consistently profitable traders do. You have to be ruthless with your discipline, your execution, your habits, your routines. Ultimately, we all make mistakes. We're all human, right? Even consistently profitable traders, we make mistakes. We're not perfect. No one's perfect. The difference is that when unprofitable traders lose, they lose big and they lose their heads and they go on tilt consistently, right? Whereas consistently profitable traders, they limit those risks. They limit the drawdowns that those negative decisions have on their P&L. And so I think what most people need to hear and understand is that if you're having psychological issues, instead of looking at yourself, maybe start looking at your technicals as well. Maybe start looking at your strategy. Is my approach clear enough? Am I chopping and changing risk? Am I coming to the markets with a clear head? Am I forcing trades? Why am I forcing trades? Right? Start looking at the technical side of things as well, not just psychologically, because very often a lot of your psychological issues can be resolved by getting clearer on your technicals, getting clearer on your plan and your approach. So wrapping up this video then, I guess the point I'm trying to get across is consistently profitable trading is not just purely psychology and it's not just purely technical, right? There has to be that merge of the two. And so if you're suffering with psychological issues, the best thing that you can do to help your cause right now is to look at your technicals, right? Because maybe you're having technical issues. Maybe you're having lack of clarity issues. And that's going to affect your confidence. That's going to affect your psychology, right? And then you're going to go back and forth between the two. So get clear on your approach. Get clear on your routines. Get clear on your discipline and start being a consistently profitable trader.